Good morning, this is Tommy Lackey, and this is another installment in our sector drill down. Today is Tuesday, October 12th, and let's go ahead and get rolling. This week, we're going to take a look at the materials sector, but on a quick review, last week we did the financial sector, performed very well. Week before that, energy, which is still going. So now let's take a look at the materials sector, which is in a little different positioning than the other two, not quite as advanced in its relative strength. So first we want to start with moving over to the universe page and looking at the equal weight sector RS rankings. As you can see here, the materials sector is number 4 now. Has moved up 9 relative strength points over the last week, and over the last quarter it's moved up from 36 to 73, so it's kind of marching higher. And if we pull down here to the equal weight subsector RS rankings, you can see I've already sorted them, or no, actually it didn't get sorted. Let's sort them here for materials. And you can see our materials subsectors, basic materials of 55, an 80 for chemicals, a 69 for industrial metals, and a 18 for precious metals. So still not out of the gutter there with the precious metals, but as we'll see in the chart, things might be starting to turn there. So once we move here, we want to move over to the basic materials page itself and start looking through our charts and see kind of where we're set up. As I was mentioning, this chart right here is not quite as advanced as far as working towards the highs as the last two sectors. Energy had already broken out, but financials were right on the verge. Here we see materials are still in kind of a basing type action and moving towards the top of that base. So obviously the first thing that we're going to need to see is it move over this trend line that we have right here, or this resistance area. And as you can see, it got up there yesterday and then pulled back with the rest of the markets. Now again, this is our equal weighted subsector here. But as we look down here in the chart, you can also notice that we're still in a bear range when it comes to RSI. Now, an RSI bear range does not mean a large pullback. It can also mean a consolidation like this. But I just want to make note again, let's take a look back at how this shifted. And as you can see here down at the very bottom, we shifted into a bull range. Stayed up there most of the time, only tested it a couple times, all the way until this spring when we basically rolled over on the materials sector here, and we've been in a bear range since. Now, we still want RSI to get over 60, but we're starting to see a decent move here. And if we can break over that resistance line here, we could challenge the highs and potentially move on from there. Obviously, materials would go with the inflation idea that everybody is so keen on right now. Now, again, we're not there yet, but this is where we kind of start and we kind of see if this continues to emerge. Its new high, new lows is not terrific. Advanced decline line is still in an overall downtrend. Obviously, if we want to take here and look at our trend line here, we've got some room to move before this one actually turns itself back over for us. Okay, and then down here we have made it out above this previous low. Sorry, guys. But we certainly want to hold that going forward and continue to work our way up to this other one. But again, as you look here on the overall breadth chart, percent above the 200 days, only 48%, 41% above the 50-day, and now 66% are above the 20-day. So there's we see our short-term indicators starting to work. Our summation index is starting to turn as well, crossed up, but it's still well below zero. So again, emerging trend, if anything, so we want to make sure we stay cautious or understand the risk through position sizing. Now, once we move into the next section, which are relative comparatives, you can see here on a short-term stance, we're starting to see some turns here, right here on the end. In longer term, it did show a good bit of relative strength last year and just came down and lost that during this sideways move. So if it can pick it back up, maybe break a trend line here, which it's already starting to do against the universe, but also see it pick up against our other two, that would be nice. New highs have turned and taken over from new lows on all the levels, but nothing here is exciting. We haven't really seen the big breakout here, so we might be early enough that we can get in before we see larger moves. Now, we want to look at the subsector rankings here before we go in and looking at each one of them. Chemicals is on top, which of course, terrific sector. It leads materials often. Industrial metals have moved up 25 points. Not hard to do considering that's only one step, but moved up to the 75. You got basic materials at 50, and then precious metals has been the dog for quite a while and remains that. Albeit, it has the strongest performance over the last week, so that's something we might want to take a look at. Now, when you look here, most of the materials ETFs that are doing the best are actually the natural resources one that has coal, things of that sort in it, but also has energy as far as oil. So those are going to be a little bit skewed, but doesn't mean they aren't good opportunities. As we go down here and look through this list, you can see your strength stays there. Then your small cap materials, agricultural, copper. This is an interesting one, moved up 39 points over the last 5 days with a strong day yesterday. We'll look at the ETFs that I've marked up in just a minute. Now the material stocks, again, leading. You got METC, LXU, MEOH. A lot of these have already moved. CF, MOS, names we know that have already made pretty decent moves. We're going to look at the individual stocks once we get down to the subsector level. So what we want to do here now is we're going to go over and we're going to take a look at some charts I've already pulled out on the ETF section. Now ready for potential for a breakout here. You can see here on the weekly is MOO, the agricultural, MOO. It's in an RSI bull range on the weekly. It's in a daily bull range as well, as it held 40 here and it's been over it here, but it's just not really moving much. So we wanted, let's see, get over around 94-ish and start to pick up some steam to help us out if this one's going to break out. FMAT, FMAT, Fidelity Materials, nice weekly consolidation here in a bull range. The daily RSI is leading price here. It had a good start yesterday and then pulled back with the rest of the markets. So we'll see if it's going to extend and get the RSI over 50. Our next one is LIT. LIT was in a situation to where it is in a larger consolidation for the last couple of months as well. On the weekly, it still has a good high RSI and it's pulling back some, but on the daily, even though it's come down, it started to kind of hold at this 40 level and look like it might want to curl higher. Now, I wasn't as excited when I looked at some of the lithium stocks, so we want to keep a close eye on this and make sure that it doesn't break below this 78.50-ish level. Another move below there that holds down there could be a little more of a concern. Now, our next one, as I said, one of the natural resources, GUNR, looks more like a kind of a pullback basing move. It's come up 3 strong days, so you might have to give it a little bit of time to work out this level here because you have a previous support, then became resistance, and now we're right at it again. GRES looks more like a base break. Very low volume here, so I'd be careful on that one. GNR, another one that has kind of a basing action working its way out. New RSI bull range here, and the weekly never got down into a bear range. COPS, BX, the copper, looks almost like a basing action, but it has a little more room to move. We'd probably want to see it over this 38, if not the 38.50 area. You can see we're still in an RSI bear range on the daily, but the weekly is in a bull range and starting to try to kind of curl a little bit as price tries to work itself out. So at a minimum, probably this trend line here. We can draw it. At a minimum, I'd want it to get there. If not, one of these larger ones. Oops, see, it does not like me to draw more than one here. As you can see, we have 2 of those that are kind of working against us, but once it can get through, or if it can get through, that could be a big help. Next one is more of a pullback play is PIC. You can see we had kind of a failed breakdown look. We're trying to get back above it now. So if we can move back above this with RSI holding above 40 on the weekly, could be a shot to see a new bull range and then potentially work its way over this particular trend line. See right here. So maybe 44 and 70-ish, 45-ish is where we'd want to see it clear. FTRI is another one I marked as a pullback, similar look, but not quite as progressed here. It's not back above those levels. Now our next subsector, or the first subsector, we're going to go in the order actually of the string. So we're going to start with chemicals. As we pull down here and look at the RS-RSI chart, the RS continues to kind of gradually move up over here versus all the other subsectors. Had a nice bowl looking or cup looking action here. And we're right back up at these highs. As you can see though, still in a bear range like the rest of the materials. Tried to peak above right here, and then now it's curling its way back up. This looks to me like a good stronghold here, and here. So if we can break out here soon, could have some good action in the chemical sector. I think it definitely is probably one of the strongest in the, I think that the RS and the breadth are telling the truth here. Percent above the 200-day average is only 57%, 52 above the 50-day average, and 73% above the 20-day average. So definitely moving up, a stronger summation index, and showing a little more breadth strength here with a little cluster of new highs coming in over here. Moving down to the relative comparative, again, very tight up here as far as that bulb. But when I zoom out, you can see it's had good relative strength all the way across the board for the last probably 2 weeks. In doing that, we look over here at the making new highs, and we can see we're only still in the 20%, so we're not super active yet. And then we have a 14 and a 12% for the longer term ones. Again, not super exciting. This is still emerging, but this shaping and this chemicals sector equal weighted looks really strong to us. Now here again, we can search by a lot of different things. Yesterday, it was one of the stronger sectors in the area, so we'd want to look at some of these. IPI is going to be on my list, I believe, that I have here in this chemical sector. First, we have OLN. Looks like it's about ready to break out. Daily and weekly, both in RSI bull range, has been pretty subdued. Weekly never really lost much ground. Trox, TROX, also right there at the breakout. Tried it yesterday and couldn't do it. We'll have to see if that's a failure, if that was just due to market circumstances. If we have a stronger day today, we'll see if it can move itself in the right direction. We have SSL. This one's kind of extended up here on the daily, so we might want to give it a bit. But here on the weekly, you can see it's just a nice little, pretty much cup with handle type breakout here. A back test in the range of probably 1750 to 18 would certainly not be a bad thing. Celanese or CE, this one again is kind of an internal breakout. It's right up against this level. Fresh RSI bull range potential with a nice RSI positive reversal here on the weekly a few weeks back. So if we can move over this area in the next little while. Now again, realize these don't all have to break out in a day. I don't mind giving them a little bit of time and see and let them work their way out. These are not all just for today. They can be, but don't have to be. ESI, another name that has kind of an internal look to where it had a failed breakdown, came back up, and now it's right back in the middle of its range. We'd want to see it over here about 2350, 2355 area and breaking into a new RSI bull range before we had any action here. Next we have Valvoline. Again, nice internal looking break yesterday. Ended up having kind of a tough day, but we think this is definitely something we want to be focused or paying attention to. KOP is another name. Looks like it's in an internal like breakout. AXTA is a nice name here in chemicals. Looks like it's going into fresh RSI bull range. Weekly never went through, and we're right up here towards this congestion area. For some reason, my volume and volume at price are not on these charts, so we're going to have to just go without it today, but I'll make sure I have it fixed up by next week. IPI with a big move yesterday, but still right on the verge of this breakout. Seeing some continuation here could be a strong start to a larger move here and maybe moving up into these highs in the 50 area. LTHM, another one that is a strong name. Again, it's had a pullback area, kind of moved sideways, still in RSI bull range on both time frames. SHW, little tougher area. This is one I'm be a little more careful with and make it get back over probably this 300 area. If you want to be real aggressive, you could probably go over 295. But with this looking like an RSI bear range and rolling over, it's something I'd be a little more cautious with. DD or DuPont. Again, very kind of reversal type play, pullback, and into this area of support over here on the weekly. As you can see, in RS right at the 40 area or the bull range. Daily is still in a bear range, so again, be kind of cautious. Potential negative reversal here. Oops, don't want to go too far. RYAM. Again, this one looks like it's rounding more, moving its way towards the top. Strong day yesterday. If it can get over this area. Now, this is a $400 million company, 300,000 shares, so it's small, going to be volatile, but look how nicely it held the RSI bull range on the weekly and where it's going here on the daily. Again, it's got a lot to climb there on the left side. CBT, more of a pullback type play. RSI bear range still, but the weekly held at 40. So look for a reversal there. SCL also are already working kind of on that reversal back into RSI bull range on the daily. Weekly's not quite there yet, but we're kind of clearing this little area. PPG is on this list as a pullback play as well. RSI holding right around the 40 area and starting to climb now. EMN, it is one that's got a very low consolidation, very pullback oriented. RSI weekly held 40. So this is where you'd want to see it on the longer term basis turn up. Same holding 40 here on WLKP. Has pulled back into an area that it broke down, and now it's retesting it. A move back over this could kind of get a small catapult. You want to see this move back into a bull range, and CC is one as well that's kind of in a pull range at a downtrend line or just below it. So it's coming back over this breakdown area. If it can stay above this and then work its way on up, could be a good look in the chemical sector. Next, we cover the basic materials subsector, and as we work our way down into this RSI chart, we can see the RSI here in the basic materials is still kind of on the low side, below the 50-60 range, 61 on the 1 year. As far as the versus just the other material sectors or subsectors, they're all in the 50 range, so just right in the middle here. RSI, you can see kind of the bear range idea did pop up over here but failed immediately and came back and tested those lows. Now it held those lows and starting to work its way back higher, but we're really just mid-range right now. Here, as far as the breadth, it's all pretty mediocre. You have the percent above the 200-day at 53%, 37% above the 50-day, and 58% above the 20-day. So nothing that's real strong here, although we're seeing the short-term move up with these other short-term measures, and the summation is curling up as well on a breadth. Now, as far as the relative strength, again, right in the middle, not showing any massive strength versus anything, so probably not a major focus, but it is something that we want to kind of be glancing into and see where the opportunities are, because there are pretty much opportunities in every single subsector. Here, I've already marked the ones, and as we see, GEF is up here at the top. It made a major breakout, came back in and failed, and now is moving back above those highs. RSI in a bull range on both the daily and the weekly, and even on this pullback, the daily RSI held 40 with a CFG below zero. Good sign for potential reversal back there. LPX looks like it's about ready to break out. Great looking chart here on the daily and weekly. Daily holding RSI on the pullback and now trying to move its way back above this little consolidation here. Weekly breakout has plenty of room on the indicators. MLM is our next name. Again, it's more of a kind of an internal thing. Had a rough day yesterday. Again, marked these this weekend. So we want to be cautious about this bear range on the daily and make sure that it does perk back up, move its way back above these highs, probably in the 362 range. VMC, another name in this space, again, had a rough day yesterday, but was looking to shape up above 180, might be worth a look. SEE, above 50, probably 58-ish is where this is, and that's kind of a polarity level, as you can see as you look back this line. It's under, over, and now right back at it. So a move back over this 58 area could be a strong indication of a new trend emerging. The weekly never really broke down on the RSI. It's really just kind of more of a consolidation. We could get a right shoulder, but that's just a could. We're not there yet. At this point, we look and see how far it can move higher if it can get over 58. VRS is kind of a pullback looking play on the daily. Still strong as RSI on both daily and weekly, and this is one of those mushy trends that I talk about. So if we do get back over, say, 2140-ish, maybe worth a look. BCC is more of a basing action. Looks like it wants to turn up. RSI holding in the 40 area back here. Weekly is in the same, but not really in a bull range. So, you can try this internal breakout here, 56, 50, 57 area, or you can wait till it moves over the 5950-ish, 5940-ish. WRK looks like it's, again, kind of a basing action, maybe 5270 to 53 zone, something we're looking for there. MERC, this is also kind of a pullback basing action. Reason it caught my eye is the RSI held the 40 level here, and it's really never broken it much here. So if we can get a move back higher above about 12. RFP, this is one that had a great move yesterday coming out of this basing type area. RSI in a new bull range, and the weekly never turned down. So that's one that may be worth a look. $1 billion company, could certainly move up the right side. EXP is kind of a basing action in kind of a bear range here, so I'd be a little more cautious about this one. Make it prove itself, get back over 140. IP is one that looks like it could be moving to break this downtrend line with yesterday's strong move. We want to see it hold over. Consolidation for a few days is fine. Even pulling back and riding this line down is fine. But though ultimately we want to see this RSI get over 60 with this weekly turning up and never losing the bull range. Here's some on the short side. Some looks like it's breaking down. It could continue if it loses this area. RSI kind of had a failure swing here. The weekly's still in a bull range, so you want to be cautious about catching some air, but it could be a start to roll over there. You have here in PKG also negative reversal, RSI negative reversal in a bear range. Weekly still a bull range, but we get a break below this level, confirms that we could be into the low 130s, if not down into the mid 120s. GPK is also another name that looks like it's breaking down from this higher area. Could be somewhat of a head and shoulders. Not really that worried about that. What I'm looking at is this RSI bear range kind of breaking down here. Daily's in a bull range, so if it holds, could be a look both ways play. If we hold here and work our way back out, could start to break to the upside. But right now the caution is under about 1860-ish. And then Barry, also one that I liked a while back, but after this big failure, not much of a bounce, and now starting to roll back to those lows. This one could easily come back down to the 55 area, if not all the way down to the 50 area, for some testing if it wants to break this RSI bull range. Now moving on to industrial metals, we can see this one on a longer term relative strength has held up very well. The black line up here at the top has held up very well, whereas we saw a big dip here recently in the two shorter relative strengths. But overall, the chart has moved more sideways than anything else. Yes, we had an RSI bear range that kind of popped above 60 but couldn't hold it, came back down below, and now we're working our way back higher. Moving into the breadth, look here again, 61% here above the 200-day, 37% above the 50-day, and 61%. So the long term never broke down that much. The short term is making its way back. It's the midterm moving average here that's kind of a problem. And so is the summation index. It's still kind of buried down there and just now starting to turn. Again, that turn could give us somewhat of a yellow to green light, but we still want to be cautious about making sure this is where we do want to devote capital. As you can see right here, it's been kind of bouncing around all summer or since early spring, and at this point it is turning up, but not as good as the chemicals was. Also, though, one thing it is doing is on the 20-day, it's starting to see quite a few new highs. So it could be just an initial move here, but it's just not there yet on the percentage making new highs on the longer terms. Now, in industrial metals, again, if we take a look at what I marked yesterday, I marked these over the weekend. So one is Tech Resources, broke out yesterday, held the breakout, held strong most of the day. So if you can get continuation, that might be worth a look. TMST is trying to break out of kind of a little pullback base. LAC, again, kind of a little wedgie type basing here. Tried to move out of yesterday and then pulled back some. Suncoke Energy, again, it's kind of in a little bit more of a basing action. You might want to wait till over 8-ish since it's a very small company. MT, this one gap down, is working its way back and want to potentially look into that gap. The weekly never broke down and it held this major support. So now it's a matter of seeing if it can get up here and try to close this gap and move on. After MT, you have HBM. Again, trying to have a basing turnaround play. CNX, this one's moved big yesterday as well. Had a nice looking kind of double bottomish type rounding bottom base, and it's breaking out at this point. NEXA also kind of a basing action here, moving into a new RSI bull range, and the weekly is moving up as well. You want to see it hold this probably 9 area, 875 to 9. On the retest, SCHN, it's another one that's moved strong off the low, so it might need a little bit of time, but it held the weekly RSI bull range. Now, when we look at the other side of this, let's look at some of them that could be short candidates. WOR, right here on this shelf that loses 52, it could be heading towards the south. HAYN, I do not know why that's on the short one. That should be on the breakout one. So that is the wrong color. RS, again, it was kind of down here on this edge looking like it could lose here over the lows, kind of bear flagging area. We'll see if it can make it here, but if we get a reversal, you could be of a little more concern. Again, this one is holding RSI 40, so maybe it's a little early to make that assessment. And then finally we have X, which is also kind of right on a ledge. We'll see if it can hold above it. If it rolls back over here, it could be a good short, but that weekly is holding. So let's give it and make sure that it kind of breaks it. I had marked by this one LBW, or look both ways play. Now our final one is precious metals. Precious metals is one that's basically been just really ugly. As you can see here, it was in a bull range before, more of a sideways move though, and then it got a little bump, but then it just died. And it has come back hard over the last, since May-ish, and now it is looking like it may want to reverse. Now it's got a lot of congestion in here it's got to get through, so it could take a minute, but this is a nice little look to where it's starting to work its way around. Bear range, and it's already above 100, so you know it's got to get at least above, I'd say, the 5 area on this particular chart, or these previous lows, get back in that range to be effective, or something we really want to mess with at all. Now when you look at the breadth, again, only 3% above the 200-day, 28% above the 50-day, and 62% now above the 20-day, so it is showing that spike, but it's got to hold a little more than that spike because the rest of the breadth is just mediocre, if not bad. The relative strength comparatives, all bad, starting to turn a little bit, but you really got to want to be a bottom fisher to jump out on this one. New highs, just not there on 10-day, 20-day, or 21-day, or 63-day. So with this one, I don't expect to see a whole lot in here, but we'll show the few names that are up there. KL's up towards the top of a kind of breakout here, but if you look at the weekly, it's an internal breakout. Can get over here, we can certainly move up into the high 40s, if not early to mid 50s. BVN is another chart that looks like it can be kind of basing out and trying to turn if the overall sector does. FNV similar, PBG, excuse me, is already based out a little bit more, is coming back above, and it's in an RSI bull range. This is one of the few ones in the sector, but the weekly is not there yet. Now, when you look at this trend line, you draw down through here, it looks like we're breaking it here. So PVG may be one of the ones that you focus on if this is an area you want to be in. AU is another one who's already moved in an RSI bull range on the daily. It's already kind of held and moved itself into this gap. Now it's right at this resistance. So again, between there and the 1720 support, you might see it bounce around a little bit. But that's pretty much it in this sector. So as you can see, going through the materials sector, it doesn't quite have a lot of the flash that the last two we're working with, but it does have some stuff that could be emerging and could be working itself into new uptrends if this inflation theme continues to go, if we continue to see the commodities and materials sectors moving. As always, I hope this helps. Feel free to come to the powerinvesting.com website and look through some of this stuff yourself. We're trying to continue to improve, build new stuff out. I realize it takes a second to load, but also realize this is a lot of data you're getting in one place in a very fluid way. So hope this helps, and hope everybody has a great week. Thank you.